Adidas announcing earlier this week that it is officially assessing strategic alternatives for Reebok, which includes a potential sale of the brand. I sat down exclusively with Adidas CEO Kasper Rorsted and asked him whether the pandemic had anything to do with this decision.
Not at all. I think overall the sporting goods industry has been hit like any other industry this year. However, the long term or medium to long term for the sporting goods industry is exceptionally good, through casual wear, through living a healthy life, doing more sports. So the underlying, I would say the underlyings for the sporting goods industry is even better than it was before. So what has happened this year has absolutely nothing to do with the consideration we have for Reebok at this stage.
Any other decisions or strategies that you're having second thoughts or at least retooling as a result of the pandemic and the enormous shift we've seen in consumer behavior, for instance, to online and everything else that came with it?
So about 4 years ago, we did less than $1 billion online and more this year, and this year we'll do substantially more than $4 billion. So what we are seeing is a dramatic acceleration of online, which is really playing into the strategy we put in place 4 years ago. I think that's probably the most profound. The second is an acceleration in just clothing style that I think is going to be a very long way back before people want to go back to a suit and brown shoes, and that's playing into ours. That trend was ongoing. There's no doubt the pandemic has really accelerated that. And with people working from home, I don't see many people wearing a suit and a tie working from home, and that's very good for our Originals business.
What are they wearing? Are they wearing tracksuits?
No, if you looked over the summertime, one of our fastest selling items was the Adidas, basically the sandal that you wear to the beach. It grew 200%. But what they're wearing is, jogging pants, T-shirts, or just much more casual wear. And that will continue. There's absolutely no doubt about that, because if you look upon one large firm after another, I think Google went out last night and said they're not going to expect their employees to come back before sometime in the fall. So the trend from working from home and having a much more casual lifestyle is actually playing very much back in, to a lot of the clothing we have, which is casual related clothing. So we're very happy of that consequence. Of course, we're not happy with the pandemic.
Obviously. We saw the numbers were pretty decent in the third quarter, though you warned on sales in the fourth quarter. So what do you see in the outlook? Is it just because of the lockdowns happening in Europe and in some places in the U.S.?
We were a bit cautious, going into the fourth quarter because that was prior to the lockdown. Right now, we are seeing our stores are open in the high 90s. So right now, we're seeing very strong Christmas trading despite lockdowns in countries like Germany, Netherlands, and Greece, which are coming these days. Online is performing very well. So actually, it's very much along the expectations where we set pretty much around prior year level. So Christmas shopping is working well, and of course, driven by online. But we still need to be cautious because, frankly, nobody has really any strong idea about when we're going to see I would say, a sustainable opening. And I believe that the sustainable opening will only come when you have a very widespread vaccine being taken on countries across the board.
I mean, your stock has held up well, but so has Nike, your chief competitor, Lululemon, just reporting results. We'll hear from Nike on Friday. But do you think they've been able to fare better than you? Why has it been trickier than you when it comes to that sales recovery?
I don't think that there's been really a big difference. If you look upon our performance over the last 2 to 3 quarters is very similar to that of our competitor in the U.S. I think there's some regional differences, but overall, I think actually the sporting goods industry has held up very well. What you couldn't take out of the numbers this year is, and that went for everybody, more or less a complete lockdown during several months, April and May, where we had a lockdown of up to 70%. But overall, I would say, we've held up fairly well with our, large competitors across the board. So we're quite happy with it. We've gained market share in the U.S. this year. We gained market share in China this year. So 2 key markets, we've gained market share. So in that context, we're actually quite happy with the year, despite how the year actually went.
So you are gaining share in the U.S. That was one of my questions. What are you seeing from the consumer in the U.S. right now?
No, we are seeing the consumer really returning partially to the store. We still see traffic being down, but the conversion rates in store is higher, and also the basket size in the store is higher. And then, of course, you're seeing also a very, very strong uptake on the online business. But I think one of the really interesting parts moving forward is that, of course, the sports brand that have a very high focus of sport will have a pickup when you start getting fans back in the stadiums. That has not been the case for the last 12 months. And of course, those brands who has a very strong, I would say, engagement in soccer or in American football or in basketball, they will grow quicker than the other ones when the fans starts getting back into the stadiums. And that, of course, we assume will take place probably around mid-year next year, and that should be, a big uptake for our company.
Shepard Smith here. Thanks for watching CNBC on YouTube.